Good morning, it's Thursday and we're live on the floor of the stock exchange to talk about the markets with Jim Cramer. All right, Jim, a big deal announcement today.
Yep, and we spoke to David, who's the CEO of Cigna, and I've got to tell you, I think the combination makes sense. Why? Because Express Scripts stock has been just in the doghouse forever, ever since it lost Anthem, which was 1/3 of their business. Announced a gigantic cost cutting. The company hasn't been getting any credit for it, so who comes in? Cigna to take advantage of it, and the accretion is so great here that people should be buying Cigna right here. That's what I felt after the interview. I think the stock's too cheap, given all the money that they're going to be able to make next year in this acquisition. Quite an acquisition. Cigna's a great manager, too.
Cordani highly confident that the deal gets regulatory approval. Do you agree?
I mean, there's two service businesses that are additive together for clients. Yeah, I think it will, although there does seem to be antitrust issues everywhere these days, but I think this one doesn't have a lot of them.
You had a caller on Mad Money last night worried about a 40% decline in the stock market.
JP Morgan, some co-president said it. Look, my problem with that is without some sort of black swan event, there are a lot of companies that will just stand there and buy back stock and make themselves take advantage of any sort of decline and sop up a lot of equity. Now, I'm not saying that it can work as a trampoline, but I think that they're down there, the companies are flush with capital, and you could see 10-20% of the stocks of an actual float be bought back. So I'm not a buyer of that theory.
Yeah, I mean, maybe a deal like this helps to calm those fears.
Well, I mean, I would say that anything that takes out stock and makes it so there's more of a stock shortage, which is what I felt was going into January. And then February, obviously, because of the VIX, because of rates going to 3, the companies couldn't buy back a lot of stock. But this is a sign, and David Faber confirmed it, a lot of deals coming. So it could be good. Obviously, we're all caught up in the Broadcom Qualcomm deal, which is kind of not taking place. That's a $110 billion deal. We need more deals to sustain these valuations.
And that would be the biggest in tech ever, I believe, if it happened.
Indeed.
Meanwhile, Jim, you liked the Costco quarter, 8.4% rise in comps, but the market action is kind of bizarre.
Well, look, I mean, they're talking about not giving a special dividend with the money that they're getting from the tax breaks. They're talking about not giving an accelerated buyback. They are talking about paying the workers more, and they're talking about giving more value to the customers. When we first heard about these buybacks, it's kind of funny. There were a lot of people who speculated that when you got the tax reform, all you would get are buybacks. I think this is Exhibit A in the fact that that's not true, and that the workers are doing better and the customers are doing better.
You talk a lot about the labor versus capital debate.
Right. Well, I'm talking a lot about that lately anyway. I actually mentioned Marx to one of my producers yesterday. This is a sign that labor is doing even better at Costco. I gave a speech once at Bucknell where my wife's on the board. Congratulations, Bucknell, for winning the Patriot League. Talking about labor versus capital many, many years ago about a laissez-faire notion that capital was going to win. This is one where there are a lot of bonuses, a lot of RSUs being given. Look at the Apple deal. Workers are benefiting from this. And now some people feel, come on, it's one time only. Maybe those are people who have never been a worker.
Yeah, too rich for them.
Yeah.
Yeah, maybe. Also, Kroger, some investors worried about their guidance.
Well, Kroger is tough because I didn't understand what that stock was doing in 28. Costco talked about okay numbers for food, but I go by your Whole Foods. I know a lot of people felt that it was whole paycheck. Whole Foods prices are coming down because of Amazon. And I just don't want to be against Aldi. I don't want to be against Whole Foods that's run by Amazon. And Kroger went up too much. Now, Kroger did overshoot to the downside previously, but I understand why Kroger's down. It makes sense to me.
All right, Jim, who do you have coming up on Mad Money tonight?
Well, I've got Martin Marietta. They're important because everybody knows around our area why the roads are so bad, particularly after the storm. But when you see shovel ready, when you see projects in the South in particular, you see Martin Marietta making money because they make aggregates. And then Thor, the stock was up big and it's come down. Let's find out what that is. It's an experiential situation. Maybe they do have to assemble their products here, and we obviously have a lot of issues involving steel. a lot of issues involving aluminum. But Thor, that was a blowout quarter. We got to find out what's going on.
All right, that's tonight, 6 p.m. Eastern on Mad Money. Jim and I are going to continue to talk about tariffs and many more topics. Join us on actionalertsplus.com.